Okay, well, we'll get started, everyone. Thanks for being here. Good to have you all on board today. Obviously, we're talking today about the Wellington region real estate market for January 2021, the first month of the year, compared to January 2020. People will continue probably to drift on, so please excuse me as I let them in, and I'm slightly distracted. First thing to say is that January does tend to be a slightly unusual month when looking at the data. It's coming out of December and out of Christmas and out of holiday mode, and so the data does tend to be a little unusual compared to, October, November, December, and also February and March and so on. So it does kind of stand on its own if you're comparing it to the months around it. So that's why we have to compare it to other Januaries to be relevant. And you'll see what I mean soon, but also the 6-month moving average data becomes perhaps more useful when looking at the month of January. In any event, we'll push on, and as usual, folks, please just jump in if you've got anything you want to ask, or if and don't wait till the end. This isn't a monstrous group of people, so it's quite manageable. If you want to say something, then just unmute yourself and fire away. The comments section is not necessarily easy for me to see while I'm in screen sharing mode, at least not on the way I've got it set up, so I can't necessarily see your comments easily. So please just unmute yourself and jump in, and happy to have a discussion. Always makes it interesting to hear what you guys are thinking and what you're wondering and what you're thinking about. So let's get into it. I've been saying this for a wee while now. The market is still unbelievably hot, and you'll see soon that we've actually seen the highest price growth seen in Wellington, at least for a long time, or since some of these numbers have been being tracked anyway. So I mean, each month goes past and it continues to surprise me, makes my eyes water. It will come to an end eventually. Everything does. Only a question of when, and who knows, it could be some time off, but only time will tell. So here we have the median sale price. So if you look at January 2021, 792,000 compared to January 2020, 620,000. That is a massive growth there, nearly 28%, rounded up to 28%. The biggest growth I think we've seen since these records began, or since certainly for well over 10 years. If you look at the monthly numbers there, you can actually see that the median sale price for January is below that of December, and about the same as what it was back in November. And this is what I'm saying, what I said before, is that January tends to be a month that bucks the trend. It's different from the other months, and it's very normal for January median sale prices to be below that of December and below that of February. And if you see in this graph here, this here is January, this here is January, and this is January too, and this is January too. So it's completely normal. It's nothing. It doesn't mean values have fallen in January. It must be that it tends to be the cheaper houses that sell in January. Maybe the more valuable houses, they don't want to sell then, and they put their property on the market for a proper campaign. Maybe the sales that come through in January tend to be cut short, or they're I don't know, they're quiet listings, or somehow there's something different about January. So I wouldn't read too much just into that monthly data. So the 6-monthly data there, you can see the trend is still upwards. It's being brought up by the strong, 6 months prior to January. But nonetheless, January to January 2020 to 2021, up 28% is absolutely enormous. So I was curious to see what is the movement in the housing price index. And I don't know if you follow this, because median house prices are not necessarily reflective of underlying movements in value The trend, of course, is what's most interesting as opposed to month-to-month movements. But the housing price index by the Real Estate Institute, that is a stratified mean. So it's actually the average, the bottom 10 percentile, the average sale price in the bottom 10 percentile, and then the average sale price in the 10 to 20 percentile, etc., 10 times right up to 100%, and then the average of all of those weighted for the number of sales in each of those areas. So what this effectively does, the statisticians have worked it all out, that it tries to estimate in the most accurate way possible the true underlying value of properties over time, as opposed to reflecting the nature of the properties that have been sold from one month to the next, which can, of course, impact the median or the mean or the average. So the house price index, I took a look at that, and I've got it here for you, a snippet of that. So you see here the house price index. What is the index level in January 2021? What was the movement compared to 1 month prior, 3 months prior, 1 year prior, and in over 5 years? And so here we have the whole of New Zealand. So in the last month, 1%, 7.5% in 3 months, 19% in a year, and on average 9% in the 5 year, for the last 5 years. And here's Wellington, and this is Wellington region, and then the 4 areas that make up the Wellington region. At least this is according to the Real Estate Institute. So in the last month, 3%. So 3% between December and January, 12% between, that's for November, December, and January, and then an astronomical price increase of 26% between January 2020 and January 2021. So the previous slide showed a median movement of 28%, and the underlying house price index for the same period of time is not that much different from 28%, so still 26%. So that is remarkable. And you can see that Upper Hutt City has enjoyed bigger increases than that, so is Lower Hutt City, and so on. And this sometimes tends to be the case when, obviously, Wellington City itself has become more expensive. It prices certain buyers out of the market, and they're pushed out to other locations. That's your classic ripple effect. But nonetheless, that in this instance, the median price and the house price index quite consistent. So it is a reasonable reflection that actually house price growth and value growth really is very, very strong. It's not just an anomaly. So you see there that is the highest ever 12-month rise in the Wellington region house price index since the Real Estate Institute started collecting the house price index data. What I don't know is how long that's been, but it's not a couple of years. It's got to be at least 10, 15 years, I think. So 26%, absolutely enormous. So no question, prices in Wellington are absolutely flying. I have to say, I can't help but wonder, are there a bunch of people out there who have their finance approved, and they know that the Reserve Bank have said the LVR requirements are becoming a bunch stricter now, or going forward, currently 30% for investors and coming to 40% soon. And of course, owner-occupiers, minimum 20%, or at least no more than 5% of lending can be extended to owner-occupiers who have less than 20% equity. And so there must be a bunch of people out there who have finance approved according to the old LVR rules. Now the new ones are coming in, so they know that when they have to reapply to get their finance extended, or their approval extended for another 3 months, then the new rules will apply, and that is going to take a bunch of buyers out of the market. Is there a rush of people trying to buy something before those rules come in and before they are locked out because of the more restrictive LVR requirements? Maybe, and if that's the case, then obviously in the next month or two, we might see a gradual cooling or less hot buyer demand, you know, in the marketplace. But yeah, time will obviously tell. So how many new listings have we seen in January? Again, this is January's an unusual month. Obviously, very few people will list their properties in the first couple of weeks of January, and then a lot start bringing their properties to the market at the second half of January. And January 2021 slightly down by 4% on January 2020. And contrary to popular belief, this has actually not been the trend for most of the last sort of 6-9 months. We have seen, for the most part, more listings coming to the market than 12 months ago. This is obviously not down by very much, only 4%, but nonetheless, I'm sure that it's less than what we've seen on average the last 6 months, which tends to have been a little bit more, a few more listings coming on than 12 months ago. On the other hand, the number of sales that have been taking place has been more than 12 months ago, but in January, down a whopping 31%. Now, again, typically the sales volume in January is a bit lower than in December and in February, and certainly in this year, January 2021, 285 is really quite a low number. Now, I apologise. I'm just looking at this graph here. This graph has not been updated. This is showing the graph as at December. So I've obviously failed to update that graph there. So these numbers are not showing the true number. It's right down here, obviously, at 285. So apologies there. So yeah, but the numbers there are quite interesting. 285 sales versus 413 last January. So quite a big reduction. So is that a reflection that there is a lack of demand, and that's why there are a few not as many sales taking place? If the low sales volumes was occurring at the same time as price weakness, prices dropping, and in particular the house price index dropping, then that would indicate a weakness in demand. That isn't happening, and it's certainly not what we're seeing on the ground, on the front line as real estate agents. So perhaps that low volume of sales is actually being more restrained by the number of listings that are available. We did see a drop-off in the number of listings in January compared to 12 months ago, only by a small amount though. But anyway, so quite a considerable drop in the number of sales taking place. As I say, I don't think that's because of an underlying drop in demand. It's not what we're seeing on the front line, and it's not being accompanied by a fall in prices, so that wouldn't suggest that's the case. But interesting nonetheless, a big reduction in the number of sales taking place in January compared to 12 months ago. Duration to sell, again, in January, it's an unusual month. It tends to take longer. When a property sells in January, it's taken longer than it has done in December and longer than it does take in February. So you can see here, that's no exception. It's jumped right up from December last year. The average, I believe, the duration to sell a property in Wellington in the month of January, the average is long-term about 44 days. So it's certainly low compared to the long-term average. Compared to January 2020, it's a day less, so it's not inconsistent there. Yeah, reasonably consistent compared to a year ago. So it's consistent compared to a year ago and relatively short compared to other Januaries, just not short compared to other Decembers and Februaries. Inventory levels, again, we tend to see January inventory levels go up a little, and in December last year, we had the shortest level of inventory I've ever seen at 4 weeks. January 2021, oh my goodness, and I've made another mistake there. I apologise in my haste to get these numbers ready for you this afternoon. Some of these data only came out today, so I was in a bit of a hurry to get it done. So I've got it around the wrong way in this presentation, my apologies. January 2021 is actually 7 weeks. As you can see, it's accurately reflected in this chart here. 7 weeks, and in January 2020 was 8 weeks. So it's correct to say it's down by 1 week or 13%, but certainly up compared to 4 weeks in December and higher than we saw in the 4 month prior to that. Interestingly, on the 6 month moving average basis, you can see here that we've tipped down just below 6 weeks on average for the last 6 months, and that is the first time we've gotten down below 6 weeks on a moving average basis since way back in 2016, when the market tightened right up and the boom in Wellington and indeed many other locations kicked off. So it hasn't been at this level on average over the last 6 months. for about 5 years or so. So still very tight indeed. And we look at the website numbers. This is even more extreme, and it really does show that sales have been outstripping new listings for some time now. February 2020, so this was as at, I think it was yesterday, 1,650 listings in the Wellington region on TradeMe. Sorry, that was February 2020. And as of like a day ago, only 1,082. It's in February 2021. So that's down a whopping 34% compared to a year ago. And this is certainly what buyers are complaining about, is that there are not many listings on the websites available. However, the way they express it, buyers are saying, is there's nothing to choose from. Looking at it from this perspective, that's correct. But if you look at the number of listings that have come to the market over the last 12 months, it's not dropped by much, if at all. So the change has not been the number of properties that have been available to purchase has reduced by a lot. It's just that the number that stick around on the website and hang about for a long time for someone to buy, if they're not very, very quick, has reduced. So the message there is that there are still properties coming to the market. You just got to be quick, because the ones that do come on do not hang around. And if you look at the pattern of the graph here, you can quite clearly see on a month-by-month basis, it has dropped off significantly and consistently, with a very small only blip there for spring. And that typically happens, of course, as you get the number of listings coming up in the springtime, but it was only a very small bump last spring and a reasonably late one, and then it got cut back right down again. And also, interestingly, as you look at the January numbers, typically, of course, January is when the listings start coming up again, and then February and March. And the increase in the gross number of listings on TradeMe from December to January is only very small this time around, whereas here 12 months prior, big jump up, and you see the same thing happening and so on. So yeah, pretty interesting. The number of listings available, it has increased on December, on January, so compared to January, excuse me, but not by very much, and certainly compared to February 12 months ago, it is really, really short on supply. So certainly frustrating out there for the buyers, and for the sellers, it just means that, you know, when something does get listed, it gets sold, and pretty quickly on average. So you know, good, again, good time to sell. So in summary, very, very big price growth, folks. Very, very strong on both the median sale price basis and also on the Real Estate Institute's house price index, which is really the most reliable indicator of true underlying value of properties. Massive, massive growth indeed. New listings down only slightly compared to a year ago. Sales volumes down by a long way. And as I said before, that could be concerning for sellers if indeed it was accompanied by price softness, because sales volumes dropping would can indicate a softening of supply, of demand, a reduction in underlying demand, but perhaps in this instance it's because there have been so few listings available for sale. Duration to sell is low compared to the average for January, and reasonably stable, not too dissimilar from 12 months ago. And inventory levels are down on 12 months ago, but significantly up compared to December, going from 4 weeks worth to 7 weeks worth. Stock levels on TradeMe remain very, very low indeed. The market is still so competitive. It's difficult for buyers, great times for sellers. And the only thing I would suggest, you know, is perhaps it's going to be interesting to see what happens in the next month or two as people's finance approvals run out. Are we going to have we seen in the last sort of month or so this big rush of buyers anxious to buy before their finance runs out and they get reassessed at the new levels against the new rules? We will see in coming months, but otherwise that's it. So if you have any questions or anything you want to discuss, then please just unmute yourself and fire away if anyone wants to. Shane, did you want to say something?
Yeah,
I can't hear you, Shane.
Seeing with earthquake-prone properties, is there any interest? Are they selling? Are they being listed? We've got one.
You've got one.
Yeah.
So what is it? Residential, multi-flatter?
Residential apartment in Mount Cook.
You've got one of in a block, or you've
Yeah,
got
it's a block of 7, 2 commercial, 5 residential. It's earthquake prone, but they're all bloody nice apartments.
Yep. So, and what's the rating? Under 33.
Yeah, under 33.
So it's
Under
yellow
33.
stickered, and you got till 2028 or something.
2000, what's it now? Yeah, 2027.
2020 for remedy. John, I'm just mute you, mate, because it's a bit of echo there. So that is tough going, and what I find is that with apartments that are either yellow stickered or very low, and they barely scrape through, they barely escape being yellow stickered, is that it depends who the buyer is, but oftentimes in an apartment like that, where it's one of several or one of many, the target market, the ideal target market really is a first home buyer, a young couple who want to live in the city and they can't afford a little cottage or whatever the case might be, and they don't have children, so they don't want to be all the way out in, I don't know, somewhere. I don't want to be dismissive of anywhere, but they don't want to go to Granada or Tawa or Kapiti or anything like that to get the freestanding home with the back lawn if they've got children, you know. So this is the young couple, no children, they want to be close to the city, easy care lifestyle sort of thing. These people need big mortgages, and you cannot raise a big mortgage on a single apartment in a complex that's yellow stickered or it's 35% new building standard. So yeah, I've had a bit of experience myself. Obviously, I pay more attention to my own listings, and I got better first-hand experience of my own listings than other people's, and to a certain degree, my colleagues in the office, I suppose, would be the next ones. But certainly, if something is yellow stickered, or if it's very, very close to being yellow stickered, that is really hard work. The only people who can buy it are people who need no finance. They don't need a mortgage, and so in which case you're talking either investors who are well capitalized and who are willing to pay 100% cash or borrow cash lent against equity in other properties. And when interest rates are as low as they are now, it often doesn't make sense to do that. And so in order to make up for the fact that it doesn't make much sense to do that from a leverage point of view, and also from a cash flow point of view, the price needs to be bargain basement. Now, the exception is, or the other target market potentially for a property like that is an out-of-town buyer who just wants a crash pad for Monday to Thursday or something, and they can pull a bit of equity out of their home, or they have cash, and they're willing to buy it because it is cheap. So there's no question with a proposition like that. Unfortunately, bad news is it's going to be, and if you manage to sell it for a half decent price, it's a miracle. Miracles do happen, just not very often. And so typically you need to sell it for a really, really bargain basement price. If you're trying to target the investors or the developers or the renovators, the more sophisticated investors out there, the more sophisticated buyers out there, they generally don't want to touch it unless they can control the whole proposition. So then you've got to sell the whole building. So I did sell a property, I don't know, maybe a year ago, which was 4 flats, and that was yellow stickered in Mount Vic. You try and sell one of those flats to a first home buyer, they'd never be able to buy it. The only buyers who are interested would be bargain value hunters, people who are willing to take the risk of doing the strengthening, but they want the total control of managing that whole strengthening project themselves. So you have to sell the whole proposition. So that's a tough one. I'm sorry, and I can't now remember who asked that question, but that is a tough one. I don't know if that helps or not. It's not good news for you, at least not if you want to sell. If you want to buy the rest of them in the building, you might be able to pick them up cheap and then have total control over everything. But yeah, that's a tricky one, mainly because the finance, the banks won't touch them.
No, thanks. That was a really good response and what I expected. I just wondered in this hot market whether things have changed a bit, but I think we'll look at strengthening.
Yeah. I mean, they have changed, Shane. It would have been a lot worse. But, I'm talking about if you're trying to achieve what would be a decent price for the property, which of course everyone wants to do. ultimately, if there, people will want to sell in there, and I've got one on the market at the moment, which is 34% new building standard on Taranaki Street, and it's no question, it's hard work and it's priced accordingly. But what I expect will happen with blocks like that is that over time, at first the owners are saying, but the building performs well. And as you said before, they're nice apartments and it's well located. It's a great place to live. I could strengthen, but it's going to cost me whatever, 150 grand a unit, 200 grand a unit, whatever the case might be. And I don't want to do that. Who wants to write a check when, for that much money and go through that pain and that discomfort and that inconvenience of enduring that project, perhaps moving out and all the rest of it? Who wants to do that if the property is performing well for your own needs? But over time, as more and more people, their situations change and they decide, actually, I am going to need to sell soon. When there's enough critical mass of people who will need to sell, then eventually they end up sort of biting the bullet and getting together and saying, yeah, we are going to have to strengthen. So let's just face this head on and get on with it. So yep, thanks for joining us. Anything I can do, if you want advice on your own property or anything, of course, just sing out anytime. You know how to find me. Thanks for being with us. Have a good evening. Have a good month. See you soon.